The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the December 5th wonderful Wednesday edition of the Money Masters Show with your hosts, Basil, Chapman, and Steve Rhodes today. And folks, we absolutely treasure your presence here today, and our outcome is to help you to become a better Money Master and to provide you with the tools that you need to lead an inspired life. So let's go take a look at one of these tools. I love this tool. This tool is called Creating Transformation. Now, folks, the key to making life really unique and worthwhile is but one thing, and that is to share. And that's what Basil and I are going to do here for the next hour. Sharing has a certain unique magic all on its own. And here's what I've learned in sharing ideas. I know it's the same for Basil as well. If you share an idea with 10 different people, they get to hear it once, but you get to hear it 10 times. So here's part of the self-interest for yourself, getting you even better prepared for your future. You want to share things with folks, people, because you will hear it more times than you're going to give it, and that is going to help you. You want to share ideas. You want to share with your family. Share with the people around you. That's each of you here, either listening on the radio. Maybe it's using TFNN.mobi. Maybe it's all of the folks in the den. A lot of folks that are sharers inside the den, so you want to absolutely check that out. Share with your employees, share with your colleagues, share with everyone you possibly can, because by sharing, folks, two things happen. Here's what we call it. I don't know how to explain it. I just know that it happens. I don't know all about how it happens. I just know it happens. If you share with someone else, they could be transformed. Now, think about that, folks. You could be transforming folks out there. You may have dropped in just at the right time. This may be their magic moment out there. They've got 3 numbers dialed into their lock already. Just kind of picture that they're just trying to open up their lock. And if you share something with them, you might be giving them that 4th number that just simply opens that lock. That, folks, is transformation out there. And guess what? We're all looking for it. We are all looking to be transformed, whether it's today, whether it's tomorrow, whether it's this month, and we're in December. So it could be next year. What do we do on December 31st? We all make these little transformation wishes to ourselves. Just simply go out there and share with others. One last story out here, because I love stories. And this is a story of the caterpillar, folks. The caterpillar one day says, I think I was made for more than just crawling on the ground. So the caterpillar, what does the caterpillar do? It climbs up the tree, it attaches itself to a leaf, and it spins a cocoon. Now, who knows what disciplined effort it takes to spin a cocoon out there? It's got to take a bunch. But something inside that caterpillar says what? I was designed for something more than just being a caterpillar. And then, when the occasion is ready, it opens up and out comes a butterfly that flies away. Maybe singing, I believe I can fly. You know how that song goes, I believe I can touch the sky. I'm not going to sing it for you, not in this voice here, but the caterpillar says, I used to be a caterpillar on the ground, and now I can fly. I'm asking you to go through that same type of metamorphosis or help somebody else out there. Often, folks, and you just simply want to be able to do this. There's an easy way to do this, to make a transformation. I know somebody, it's my co-host here, that's going to be transforming lives tomorrow on Thursday and Friday out there. So if you're sitting on the fence here, I want you to go to the homepage of TFNN.com. I don't even want you to think about it. I want you to think about being that caterpillar. I want you to climb up to the TFNN tree. I want you to sign up for Basil Chapman's 2-day online workshop. You're going to have Basil in your right hip making your trading decisions. He's going to be that 4th little combination that's going to help you open up the lock, and it's going to be the Chapman wave. Basil Chapman, how the heck are you this morning?
Very well, thank you, Steve. That was beautiful, very nice. Thank you.
I love little stories. There are always little nuggets out there, aren't they?
Very
and it's
good.
really true. It's the cool thing is, it's really true. You know, late yesterday, I said to Tommy, I know Basil's probably busy just getting everything just right, but see if he wants to. We had such a good time yesterday. wanted to see if he's got some time this morning, and really was just thinking about, I mean, that's in essence what you're really doing. I know that, each of us want to be able to share, and during the radio shows and everything that we do, it's a whole lot different than having somebody for 6, 7, 8 solid hours, especially 2 days in a row out there. So, and everybody wants to be, we're always trying to transform ourselves. I know that there's things that you've added to the Chapman wave over the years.
Yes, what's interesting, you were talking about 4. When I talk about 4, I'm talking about 4 peaks.
Yes, how about
peak
that?
A, B, C, D. And if Al, our wonderful engineer, is able to move us just quickly over to my charts, I'm going to show you something about Apple that is fascinating.
He is, absolutely.
So in the charts that we're looking at right now, the Apple chart that I'm showing shows a monthly peak D.
Ooh.
Peak D in the Chapman wave is the 4th highest. It is the objective in the Chapman wave to get you from a starting point, what I call the buy signal, to a confirmation of a buy mode that takes you to that requisite leg D and then a peak D. Well, it so happens that Apple at 705.07, and I was on air, we were talking about this at the time. I said, I believe, I know it's hard to believe, and people aren't going to take this lightly, but I think that we're about to make a top in Apple that is going to be fairly significant, one of the more significant tops, if this becomes a peak D because of the candle that was formed in September. And what happened was...
Now, isn't that also one of your hat trick tops?
Well, we won't know if it's a hat trick top. My suspicion, based on other things that I'll mention in a moment, is that there's a really good chance that Apple will not see 705.07 for quite a while. And there were 2 things I was looking at. I remember you gave a webinar talking about silent signals.
Yes.
And I also look at these silent signals. I look at either certain candle patterns that occur either on, just before, or just after a particular bar, at a top or a bottom. I look at round numbers. And Apple had a round number 665, I believe it was, 656, the same month, September.
Yes.
That says, that said to me that if Apple wasn't able to climb above 656 and hold, that would be a very significant number. Well, that's the monthly. Now, you ask about what I would look for the longer term. Well, the MACD is just now crossed negative, but we're only 4 days into the new month, so I have to wait for the entire month of December for the monthly to give me a confirmation. Everything about it says there's a real good chance that the wick of the candle of last month going down to 505.75 over a period of weeks, we're going to slowly work our way towards that level. Now,
is that what would be that confirmation of that hat trick top?
That would be a confirmation of a hat trick top. But what is a hat trick top? A hat trick top is when the daily signal is saying, hey, I'm about to reach either a peak, D, E, or F, but a sell signal that looks like it's going to be fairly significant, which leads to the weekly. Well, the weekly... and a beautiful doji candle, the tiniest candle that it had had, one of the tiniest candles it's ever had, was right at the top. It's hard to believe that a stock in the 600-700s could have a range of 705 to 693. That's 12 points. At the very top. That was such a sign of what I call wheel slipping, where you're in the snow or the sand, you're trying to start your car and move away, and it just wheel spins, and that's using energy. So that's a peak D. That's the second one. Wait a minute, just the latest high that we saw in Apple on the 3rd of December, peak D. So just here in a few moments, I've given you 3 significant daily, weekly, monthly. Oh, and the top was a peak E, I believe. The very top was a peak E. D went quickly to E at 705.07. You'll see that there's an arch formation. There's what I call an inside wedge formation. There's a left side, right side price time match with a number of bars to a certain plumb line midpoint. To the right side is matching, and that's exactly what we've got, even to the larger context. But here's the big surprise. I just looked at the 120-minute chart.
Yes.
It made a peak D.
How about that?
In this one example, I've given you six cases of peak Ds. One went to a slightly higher peak E, but 6 Ds, and that's what we'll be learning. So you talk about
the 4.
education.
That's right. Yeah, folks might have 3 pieces of the combination, and here comes the 4th piece to unlock.
And here comes right. So I just thought I'd mention that because it fitted right into when you were talking about 4s. Well, 4 peaks is what I look at. the trick is to be able to identify what can happen after the fourth peak. This is where you can, but you don't have to have the sharpest pullback.
Yes.
That's what we'll be studying tomorrow. For instance, there's something that I call the instant restart. Well, that occurs at D. There are a whole bunch of techniques that I'll be teaching, and what I've done is I've specially planned this so that even if the CD that they get for free, it's a $249 CD that we have at TMN
yes.
on the Chapman Wave methodology, even if that doesn't arrive, because we try to overnight it to them in time,
right.
It doesn't matter. They're going to be able to archive the entire 2 days for 30 days, over and over and over, and they will then receive the CD and they'll be able to go through it. I will be going through everything in great detail. I'll also be showing the CD as we work along. He has a picture of the CD right here. There it is, introducing the Chapman Wave methodology by Basil Chapman, chart analysis in the stock market. And the pattern we were looking at, that arch formation,
yes.
is right here. You'll be able to see it. It says the arch formation, and I've got the 27 chapters. This one is chapter 13, and I just click on the arch formation, and there it is, and it explains exactly what we're talking about, and we'll be going through that in great detail.
Oh, that is great. You know, and what I've got posted on the screen here, which is kind of interesting, is one of the things that I did, Basil, is I took a look at Microsoft. Microsoft peaked in 1999 and then never looked back, never made those highs. And what I did was I overlaid Apple on top of Microsoft. And all I did was I just simply, moved the Apple chart just so I could overlay it at the highs. And
which time frame, Steve?
I just simply used a weekly
okay,
chart
great.
of
Excellent.
Microsoft, and I just simply went ahead and the squiggly line on my screen happens to be Apple, and so I just simply moved Apple all the way back to 1999 at the high out there. What was really interesting is that when Microsoft made its high the week of December 31st, 1999, it moved down for moved all the way down. Let's see if I count the weeks: 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. And Microsoft really is, and Apple's done the same thing. Had moved down, then did a bounce. Now, in Microsoft's case, it actually did a 0.786 retracement bounce here. We haven't seen that same move here in Apple yet. But so what's interesting is that you're taking a look at the charts using the Chapman Wave system out there and identifying and you're saying, look, it's going to be a long time before Apple gets back to 705. Now, you'll get the real confirmation of that at the end of this month out here, and I love hockey. Of course, they don't play hockey anymore. They're out, it seems like probably out for the season. But I do love that hat trick top. To me, that's what.
That comes from cricket. That's from the English game of cricket. The hat trick.
Well, for you it comes from cricket. For me, it comes from hockey. So it's my favorite technical trading term possible that is out there. And so so I myself am going to learn that from you by attending your course. Folks, go over to the homepage at tfnn.com. Sign up for Basil's workshop. 2 days of incredible education out there from a world-renowned educator. 877-927-6648. Dow is what is green, up 43 points. S&P up a quarter. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Basil Chapman and Steve Rhodes here. Right now, we've got the Dow up 36 points, S&P off 60 cents, composite down 17, mostly being led by Apple out there. The small caps off $1.30 right now. Now, Basil, you use three elements that you take a look at, I believe, on a daily basis. You call it the VIXY, Dolly, and Bondy. I think you should call it Blondie. I'm kind of partial to blondes out there. But, and I think that we haven't discussed this, but I overheard you, might have been last week, just talking about the VIX. And I think that to a certain extent we use it in one similar way, and that is this. People often refer to the VIX as a fear gauge out there. I don't look at it as a fear gauge. I look at it as a liquidity gauge. And as the market was moving down off of its highs, the NASDAQ itself moving off its highs from September 21st all the way down to the lows that put in on November 16th, I kept hearing people say, hey, there's no fear in the market out there because the VIX really wasn't making a substantial move. From my standpoint, the way that I was interpreting it was just simply that there was a lot of liquidity in the marketplace. It was able to consume the selling that was out there, absolutely a large leg on the way down, but I looked at it as more of a gauge of liquidity in the marketplace out there. Now, I know that you use it. Right now, you've got the VIX. It's, with the selling pressure that we've had this morning here, a little bit of selling pressure, I suppose, depends on what you're looking at, because the Dow is held up pretty well out there. You've got the VIX trading, down 9 pennies out at 1703. So maybe, you've got the U.S. dollar index potentially having put in a bottom. I don't know if that's in a leg D on your chart. But let's just start with the VIX here and maybe describe to the folks, how you utilize the VIX as just one of the 3 tools when you're unlocking the combination of the markets.
Okay, sure. Thank you very much. It's a good question. I'm going to just switch to a chart for a moment, and I'm going to show the volatility. This is what I show subscribers every single day. I have these, I call them these 5 quadrants.
Yes.
So it's like the click and clack. Have you ever heard them, the car talk guys? They always say we're coming into our, what's it, final third of the hour. No, final half, the third half hour. That's right. Our third half hour of the hour.
Okay.
Yeah. So this is the same thing with 5 different groups. So I have, this is the 120-minute chart here.
Yes, yes.
And that's the Dow. This here is the volatility index, and it's the VIX index 120-minute chart. What I like to do is I love the way you just described it. I've never thought of it quite that way. That's really good, because I dislike those terms fear and greed, because I tell you why, fear implies to me that it has a negative connotation with the word itself gives you no sense of structure. It's an emotional response.
Absolutely.
And when you say greed is it's a put down. It's saying, hey, you want to be greedy. You know what?
Sure.
You want to be able to move from a one time frame, a daily time frame, to a weekly time frame. You want to be able to stay in the trade. You're not greedy. You are anticipating higher moves. That's all.
Absolutely.
It's down.
Absolutely.
So I hate those. I call it selling pressure and buying pressure.
Yes.
Kind of what you're doing, the same sort of thing. The implication is I have got there's a system behind it. There's a methodology. There's thinking. It isn't just an emotional response. Now, obviously, it does become an emotional response on those crazy times that you see in the monthly chart when the VIX goes to 38 or 58 in the crash of 1978.
Yes,
87. So it went to 75. So now you're looking at a peak D.
Yes.
In the VIX. So the methodology works, and as it stands right now, I still believe very strongly that, and we will get there, but I don't know when we're going to get there, when the VIX finally pushes back into the 20s
yes,
and sustains the 20s, all the markets will be on the way down.
Yeah, that's where you'll see the selling pressure.
That's the selling pressure.
From my standpoint, that's right. From my standpoint, I see it as liquidity, drying up in the marketplace. And when liquidity dries up in the marketplace, that puts pressure, that puts the selling pressure out there. So I just look at it, so we have a similar way of looking at it. And I don't like necessarily using fear and greed as well. I'm on board with that.
Only because it's not explanatory. It's just an emotion. And in fact, it doesn't mean anything.
Yes.
It gives you no sense of why.
Yes, I agree. Absolutely.
And I want to know the sense of why. So in that context, that's very important. Now, if we look at the volatility index, and this is fascinating because it goes right to the root of what I'll be teaching tomorrow about the fact that I don't have to know what, where, or how. It's a methodology that says at peak D, no matter what you look at, that's where you could get your deepest correction.
Yes.
Well, right here at 89.53, pink D at the bank crisis of October of 2008, 89.53, that was peak D, and we dropped all the way to the 15s and 14s.
That was a correction. 877-927-6648. Dow giving up some of its gains, up 29 right now. S&P down 3, composite off 23. Give us a call, folks. Basil and I would love to hear from you. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Basil, Chapman, and Steve Rhodes here for you as we come back. The Dow's up 36 points. Everything else is red out there. Inside the Dow, leading the charge to the upside, you've got Travelers up $2.08, Caterpillar up $1.78, Chevron up 72 cents, Hewlett-Packard up 48 cents. Oh boy, that is a stock. It's hard to believe Hewlett-Packard down at the $14 level and perhaps going even lower. To the downside, though, the number one weighting in the Dow is IBM, off $1.40. So IBM is going to be an important stock to be paying attention to. I've got IBM up on my screen here. If you're watching us on Tiger TV, maybe you're listening in on the radio, maybe it's on your mobile device at TFNN.mobi. You can always catch an archive of this show. That way you'll be able to catch Basil's charts and my charts on Channel 10 on Tiger TV. IBM right now taking on its first level of support. There's really two levels of support out here that I'm taking a look at on the daily chart, and that is the gap up that occurred in IBM on November 16th. The high there, which we'll call support level 2, that high is 187.56. Now, it's 4.6 million shares on that candle. When it gapped up, it didn't exactly gap up with wide price spread, because on the 19th, as it came back after the weekend, only doing 3.5 million shares. That low of 188.30, was tested really just for one day out there, which was the following trading session on November 20th. And so the IBM trading below the first level of support, volume-wise, in the first hour of trading, has done 838,000 shares. Just multiply that times 6. That'll give you about 5 million shares going into a swing point that has 4.6. Now, we know that volume-wise in the markets, towards the lunchtime area, this is more front-loaded. So we'll pay attention to IBM here. It'll give us a decent signal. The actual swing point that it's trying to actually test is the November 15th area, only 3.4 million shares. I would love to see IBM come back and test the breakout, folks. It goes all the way back to January 19th. January 19th, that is a gap that has been tested. Was tested once. The volume there that was tested, you're really benchmarking it against the January 20th level. That was 12 million shares. When that gap was first tested, it was tested on July 12th with 5 million shares. Boy, I would love to see it come back there, test that area out, and because I think that would set up a potential nice trade in IBM. You've got to take things one day at a time. Now, Basil, I know that you focus not only on VIXI, Dolly, and Bondi, but also really our resident expert when it comes to the Dow. So we're taking a look at the Dow. That is in what, leg B?
Right now, this is made a peak C.
Peak C,
on the daily.
Okay.
Yes. And peak C, and what's fascinating about this? The MACD, the moving average convergence divergence, one of the technical tools I use, is still very strong, and the stochastic is still at 84%. There is internal strength. What's fascinating about this market, I've repeated right here on Wall Street years ago, they used to talk about this bifurcated market,
yes.
And it just suits us. That's a split personality market. It suits this market perfectly. Why? Because if you look at this, if you look at certain sectors, and within sectors, you've got strong stocks and weak stocks. Now what you're starting to see is that certain sectors that were really great leaders, that's certainly the high-tech area,
yes.
are not that anymore. In fact, I'm getting hat-trick tops in IBM, together with Apple, and Google might be there.
Yeah.
So this is and Amazon might be there. So I'm watching this really closely. But just shorter term, there's a pattern. In fact, I did a paper. Anyone who's interested, maybe I will send them the charts of the daily, weekly, and monthly in the long term. The report that I did for subscribers, I sent it out on Monday.
Okay.
And I described exactly what's happening in these arch formations in the weekly, how each arch from the March 6th low
yes.
has become shorter. But at the same time, you've had rising highs and rising lows. Well,
yes.
That's a bull market.
Yes, yes.
But the last one to the peak D and then E, which matched the previous one from earlier in the year back to the April-May high.
Yes.
Well, this one at 13,661 has hit this dashed uptrend line, and there's a much stronger one that goes all the way back to 2009 to the exact low.
Absolutely.
And that comes in around about 12,200. That's going to be the benchmark looking out longer term. If we break under 12,200, the 11,830 will be the next level on the 200-period exponential moving average. When you asked me about the Dow, the fascination with matching chart formations, I show this to subscribers every day. I show the Dow daily chart. But if you look at the takeoff from 12,035 back on June the 4th, I think it was.
Yes,
back on the 4th.
Correct.
Yep.
Yeah.
Look what's happened here. The takeoff itself is pretty much the same.
Oh, no question. And the candle pattern is the same. It's the exact same candle pattern.
We've gotten to a peak C.
Yes.
And there's a bit of a pullback. And before that peak C at 12,898 back on the 19th of June, there was a pullback of 1, 2, 3, 4, 5 days to the 200-period moving average. These are techniques we'll be going through tomorrow and the next day over and over to see that you don't even necessarily always have to look at the wave count. The chart patterns are important, and then it made a peak D, nominal new high, 12,946 on the 3rd of July, before pulling back again to the 200-period moving average. Now, we're a lot closer, so the price movement is not quite as powerful,
yes,
but the pattern is quite similar. And if you think of the market right now, the Dow's up 28, S&P's up -3. If at any other time, if Apple was tanking like this and there was this kind of fear, theoretically, you'd be saying, gee, why isn't the Dow down 400-500 points over the last couple of days? So you can see that this rotation is important. As long as you can get rotation with some stocks that are important, that are holding, it gives some kind of support. And, of course, the whole political aspect that's going on now is something that absolutely can affect the market. There's no question about it.
Yeah, it can. You know, so certainly you've got the politics that are out there. But, you know, when you actually just become a market technician, you go take a look at the currency market. So we were looking yesterday specifically at the euro, suggesting that, okay, it's in that leg D. Now, it hasn't confirmed, you know, what we did today or what the euro did today was it made that test of the highs again. So it got up to a level so far this morning here, 131.252. You know, and tomorrow, if you get if you can't take out that high bar, then you've got a peak D in there. Now, just simply, you know, I know you use the MACD, the stochastics, and unbalanced volume, the relative strength. I like to simply using the relative strength indicator as well. And I'm always curious as to how markets react when they get up at that 70 and that 30 level out there. And inside the euro specifically, last times that it has made this, now this is a triple. This is a triple top test out here that we're taking a look at. The euro's been very strong.
It has.
You know, the euro has not backed after making the butterfly expansion. It should have backed off to at least a 0.618 retracement, and it did not do that. To me, that's sending a message out there. Now, from a daily chart standpoint, says that, okay, it's getting ready to pull back, maybe just do a dead cat bounce, maybe pull back to the 0.618 level. But, you know, I'm still holding, I still see possibilities of this market moving higher. You talked about the weekly charts out there, and there's no question on the weekly charts. What's really beautiful about the lows that were put in last month is whether it's the Dow, the S&P, you can go back to the long-term channels that are out there. And the long-term channels going back to the March of 09 level. That's where the markets had moved down last month into it. The actual Dow pierced that area on the weekly chart the week of November 16th. Now, I'm looking at the channel lines as, you know, I learned them from Bud. Not so much just the trend lines of swing point areas. But the Dow got back inside it, and, you know, as he taught, once you break a channel, at some point in time, you're going to come back and test it to see if it was a false breakout. In the case here of the Dow, it appears it wasn't a false breakout, at least at the moment. Of course, there's a little bit of selling pressure this week. The S&P, though, held beautifully. You know, when you take a look at the S&P 500, so an even larger breadth of the market, or the New York Stock Exchange, even better than that, you know, it says, hey, our backs have been up against the wall. The S&P held beautifully. You got bullish engulfing candles each time that the market has moved down into the bottom of the channel line. So a nice little pullback here, as long as it doesn't do too much damage from a volume standpoint, could be a good sign of things to come.
Well, I've got this chart which I'm showing right now.
Yes.
And that is the S&P monthly.
Yes.
And it shows these channels in a very highlighted way. You can see that from 1994, the S&P just went straight up. It was a beautiful channel. It had two buy modes, and the final was to a peak D in March of 2000. It came straight down to a trough F in October of 2002 at 768 and went up that was a beautiful down channel.
Yes.
Now it's gone to a beautiful up channel.
Yes.
Right back to the 1552.87 level. It went to 1576 in October of 2007 at peak E.
Yes.
Now look what's happened. It comes down in a beautiful channel to another trough F, the sixth lowest trough at 666. Now we've gone up to a peak D, and the very big question for me is this E parallel / A, as I drew in the potential if there was a break to the downside and the S&P took out 1343 at any point over the next 2-3 months, that says, uh-oh, watch out, we're now in a decisive down channel, and the next major support to test to see if it's going to break altogether would be down at 1269.
Yes.
But if it starts to climb, and for any I don't care what the reason is, news,
sure,
political news,
absolutely, that's right.
If it goes above 1474.51, that started leg C up, and it takes you to the 1550s. That's what I'm looking at.
Yeah, no, I totally agree. On the monthly chart, it says that it's still game to go back up there and make a test of those highs in that 1550, 1570 range out there. So,
but you can't. You see, the most important aspect, as you say, if we are technical analysts, and we have to look at the chart, and as it stands right now, the monthly chart says nothing to worry about.
Exactly,
You're
no
still
question.
in the major uptrend.
Yeah.
But you know what? 200 S&P points, 20 S&P points or 40 S&P points, those are a lot of points, and that's why you want to put the whole package together.
Yes, and it always is helpful to, when we have callers that call in and ask us about a stock chart. 70% of the people that listen in on this show, their holdings are in their retirement fund. So they're longer-term investors/traders out there. And it's always important to be taking a look at the time frames, when somebody is looking at a stock chart, because somebody that's a longer-term trader out there, when it comes to their larger holdings out there, the daily chart is nothing more than a lot of noise.
Right.
It's really the weekly chart, in essence, that they should be dialing down to.
Well, what I like to think of, Steve, is the tide. If you throw, I show this in my CD, and there are a number of examples that I give of these different, just to give some kind of a mental visual. So what I always say is that if the tide is going out and you throw a piece of driftwood,
yes,
that piece of driftwood will just not come to shore. It'll always be pushed away.
Yes.
And if the tide's coming in, you throw out the piece of driftwood, it'll always come to shore. It won't go out, and that's the tide. But within that, you get the waves. So that's the data. You can do short-term trading. You can go short when the trend is down, but you do not want to go against the major trend, the tide itself. And that's what we're looking at here. There are signs that say, be careful. There are major stocks that are starting to turn that could essentially turn the monthly tide down, and that's what I'm looking at.
Well, no question. When you take a look at weighting structures inside, the indexes that we follow, and Apple being one of the lead dogs. You mentioned IBM as well, being the number one weighting inside the Dow. Apple right now, folks, trading down $25 and change out at 550 into the candle, this trading session of November 19th, where it had last broke out. The volume on that candle was 29 million shares. So far today, 13 million shares. So Apple has some volume in it. I'm going to just go ahead and put this down into a 30-minute chart here, see if volume is picking up to the downside. It's not the first 30 minutes, Apple did 10.5 million shares. The next 30-minute session, 6.6. We still have about 12 minutes to go and about 4 million shares so far. So Apple's next area of support really on the 30-minute chart is going to be the gap up, folks, from 10 o'clock, the 9:30 to 10 o'clock session on November 19th. There is, volume-wise, 13 million shares there. So it's got some pretty stiff volume. That low is 539.88. The high of the session, which it has already hit, is 549.67. So that's what it is dealing with here right now. That is Apple. So watch as Apple trades into that 30-minute candle out there.
I think Apple's just trying to right now make a little bit of a base, so it's getting interesting.
Yes. On the daily chart, what I would really love to see, I'd really love to see it come down and test the gap, or even the hammer candle from November the 16th out there. So we got a lot of volume. With that being a high volume high, ideally it could be one of two ways. Either come down and touch the November 16th area, and it just has to get into the highs and reject that on less than 45 million shares. That would be nice. Or just simply test the bottom of the gap, which is the 19th that it's into. Stay tuned, folks. Basil and I will be back. You've got the Dow up $157 right now. Everything else is red out there, meaning the S&P, the composite, and the small caps. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. Basil Chapman and Steve Rhodes here. And stay tuned because Basil will be up for an additional hour as we do on Wednesdays. Basil will be up from 11 to 12. Then Larry Pesavento from 12 to 1. 1 to 2 is Daryl Martin. David White, 2 to 3. Ken Shreve, the warm-up band for the Tom O'Brien Show, 4 to 6. Right now as we come back here, we've got the Dow is now turned red. It's off 7 points. The S&P off 7 points as well. Of course, that was a quick jump. It was 6 points or 7 points, now down 15. So some selling pressure in the markets. The composite down 35 points. The small caps off 5, mostly being led by Apple. Apple has given up at least 50% of its gains from the bottom. That's assuming that you were able to get in on the bottom of the November 16th hammer candle out there. Look for Apple to pull back to at least the 618, most likely a test of the hammer candle high there being $530. Gold yesterday, Basil, certainly giving it up, especially with the U.S. dollar being up. Right now we've got gold off $9 and change. So it looks to me like on the gold contract here that gold from the highs that it had put in on October the 5th, looks like it got to a trough D on that pullback into the November 5th area. Now on the way up, and I'm not sure if it was trough D. I just did a quick visual of it here, so I don't know if I caught all of the troughs down there. But it looks to me like it just made two off of that low, which is the November 5th area here, only getting to that peak B. How do the technicals look on the stochastics, the MACD for you? Because right now this
is exactly what I'll be showing tomorrow. These particular charts, that's that arch formation. I showed you the chart from the CD.
Yes.
And then what happens is it makes a little bit a smaller arch formation, and so it's called the pattern I call the dreaded H. It looks just like a lowercase h. And my target when I was on air before, this was going back to last week already, was the 200-period exponential moving average, a retest of that which is doing exactly as we speak, which is at 1688, 1686, somewhere there.
Yes.
So we're at 1687, having hit 1687 round number low. But the technicals are still quite poor. But the main thing is how does it handle 1674, which is the low of the 5th of November. If it breaks and closes under that, there could be a pop back into the 1680s, but then you've got to be very careful, because if it comes back and breaks whatever the low is,
yes,
underneath the
in this case here the level of 1672 from November 5th, yeah,
then you've got to be careful. Why? Because the next candle of importance would be 1651. That's the candle of the 31st of August. So at this particular point, as I've said before, I don't really see that much in gold in terms. So far, it's a very concerted, a well-orchestrated consolidation in the monthly charts. But my biggest concern is that, well, I said some time ago that when I see the gold, all the little gold stores that have popped up all over the show selling gold,
yes,
when I see for rent signs,
yes,
we'll be getting to the bottom, and a major gold move will start at that point.
Yes,
but we're not there yet.
No, and I think right now we're going to be here over at least the next several trading sessions with the euro likely having made a peak D. We'll know that tomorrow for sure, but certainly making a triple test. Just simply the euro is going to pull back. You're going to see some strength in the U.S. dollar index. That should put some weakness into the commodities. Right now, gold trading down $9, only 0.5%. Silver only down 18 cents as well. Light sweet crude down a full percentage point, off 84 cents. Basil, as always, great to be with you for an hour. Stay tuned for Basil's show. And, folks, please transform yourself. And there is no better way to transform yourself. Be a caterpillar that can spread its wings and fly by signing up for Basil's Master Trader Workshop. 2 days, tomorrow and Friday. You'll be so happy that you did it. Basil, have a great day and a great Master Trader Series Thursday and Friday.
Thank you very much, Steve. I appreciate that.
You bet. Take care, folks.